All right, there we go. Should
We
I?
are
We're
live.
3x Zoom. This is good.
That looks good to me right now. Um, we're live. All right, let's get some people in here. We'll kind of set it up for a few minutes as people join the stream. Welcome
Do you
back,
think this is
everyone.
too much light now?
Um, I don't think so. I think it looks pretty good. I can adjust later uh
Okay.
the yeah, I can adjust it. Um,
All right, let's dive
okay.
in then.
Let's do it. So, after a very bad week last week, the market opened up today and it kind of gave back a little bit of it right when it opened. So, that's I don't know how you feel about that. That makes me a little nervous that nobody wants to actually fully take on a rally. But if you just want to update the people on how you're viewing the market, George, yeah, and we'll go from there.
Yeah, that there was it was a pretty strong rally considering last week to start today, and it petered out pretty quickly. I mean, especially I would say Tesla just like Tesla like looked like it was ready to gain some momentum back, and it like lost it super quickly. So yeah, I think that I'm seeing QQQ net option sentiment going up a little bit into levels that we're a little more comfortable at. I just checked; it was at 17. SPY is at 11. So not the levels that we really like it to be at, I would say, at all. But yes, definitely we're starting to be in some we're definitely seeing a more promising start to the week, and it's not unexpected for us. We actually took more despite the week being bad. We ended up doing two bulls and five bears this week as opposed to one and I believe five last week, or one and four. And the reason that we did that is, we're very cognizant of the idea that the more retail investors are kind of expecting a downturn, the more likely it is to, flip on a dime, the more likely it is to have like a slight correction, whatever it is. I would say that one thing that I've kind of seen in terms of consistent behavior from Wall Street is they don't want retail investors feeling too comfortable shorting the market. So when it's something that a lot of more and more retail investors start to pile on and agree that it's a bad time, that's almost becomes more and more likely that you'll see a little flip, no matter how bad the conditions are. And that's just something I've observed and a reason that I went in with caution this week. And it looks like that, putting Meta in, even though it had some bad technicals and high short pressure, it looks like that was the right decision, because what I saw there specifically was what looked like a big overreaction to very good earnings from them. So yeah, I think that uh, I expect them to do well this week, even in a hard week. But we'll see if we can keep this up, or it just dies pretty quickly. I don't think there's a whole lot of reasons to be optimistic right now in terms of the conditions, and I would say, as it was, the end of this year might have been pretty hard. But I think the conflict in the Middle East is making everyone very, very sensitive to any bad news, and a skittish market is not a fun market to go long in.
So, yeah, so it's interesting you bring up Meta, and I was gonna actually ask you about like some of these big tech stocks that they kind of killed earnings even though they got hit, the stocks themselves. As we're seeing some digestion, do you think there's any upside, or do you just think the downside might be a little bit limited after like they killed earnings and they already went down off of it?
Yeah, I think Meta, for example, they did really really well, no doubt. I think that like Google, while they had good earnings, I don't think people like to see they've. I think it was the last 4 quarters they've outpaced Azure in growth, and that didn't happen this quarter. So I can see kind of how there was like a divergent response in that. But I think one thing that people really didn't focus on in terms of Google, and we talk about AI and being underestimated in AI on the long term scale all the time here. But something that we don't talk about is what I think a strong product YouTube is becoming. And they just grabbed Sunday Ticket. We obviously do a lot of shorts. I'm spending more time on YouTube because our shorts are doing well there, and obviously we're streaming here. But that revenue was up. Their ad revenue was up 12% in the YouTube vertical specifically, which outpaced the whole company. So I think that's a very interesting aspect to Google's business, and they're starting to kind of come for the cable TV audience more. And I think that, like, I definitely think Sunday Ticket is going to help them get more of that kind of cable TV audience and kind of strike out, one of the main things that we've been talking about in terms of streaming, that there's so many choices. People might, and I think will be in the future, more willing to pay for easier consolidations of that. And I think Fire Stick does a pretty good job of that when you can say, like, they have a pretty good search function where you can say, I want to watch this show, and that's helpful. But if Google can kind of make more like a traditional cable offering a little more accessible, and kind of undercut the cable pricing pretty well, that's a business that I'm pretty excited about for them, and especially with the increased ad revenues. I think they're actually really good at serving ads even on videos and doing it in a way that makes you watch the whole ad if you don't skip it, but if you don't, it's most of the time it's over in 3 seconds. I actually really like their ad serving model as well, and I think that growth is something that I expect to see that trend continue, and I think it's a reason that they're, I think, in my estimation, a bit underrated.
I think it'd be really interesting just to like imagine a world where Google spun off YouTube, and which one would investors get more excited about, Netflix or YouTube, if they were just like sole standing, and how big YouTube would actually be. Like it'd be probably 100 billion market cap company, right, by itself.
Probably, yeah. I mean, it's got a massive ad business and they're funneling a lot of money in it. But the that's something where it's nice to have Google as a company, because like that Sunday ticket bid is a long tail investment. And I think not something like, notice Netflix wasn't bidding for that. Apple was, Google was, and that's because you have to have a pretty large capital base to throw that much money in something with, like, and the expression long tail just means that, like, you're going to be expecting your revenues to come in for many years after that, versus like, upfront, versus like a big marketing campaign that doesn't necessarily have the same kind of tail to it. So that's often used in, like, in investments, especially alternative investments, in fixed income that have like longer, like literal longer payouts, like a mortgage with 30 years. That's more traditionally where that happens. But yeah, there's tails to anything. There's tails to really good content. Like if you think about syndication, that's just like a long tail on really good content. But most shows don't have that kind of long tail. And I forgot, in terms of mentioning things like Amazon had some really good earnings. A lot of people say Jassie's best quarter. Um, and I would say to that, like, one of the things that I think is continually shocking, and I have some interactions with people. This one guy online like really pushes Amazon, and like one of the things that he thought he misquoted their PE, and when I told him their real, like, 2024 forward PE, he was actually pretty shocked at how high it is. And I think that that's the biggest problem to Amazon. Anything beats, and they're going to do well. But if you look at the way Amazon's priced in terms of EPS, it's priced closer to like Tesla and Nvidia at like a 50 2024 PE than Google and Meta, that are both below 20. And that's really a big reason why we emphasize Meta, because Meta grew more than Amazon and is more profitable than Amazon, had huge profitability, yet it is priced at a lower PE. That doesn't make any sense, other than the fact that I think people are just more comfortable speculating on Amazon as a brand. And that is inherently why it's become overpriced, in my opinion, relative to, I would say, any of the other big seven. Like, even as much as we talk about Apple, that's priced more fairly, I think, with its dynamics. Like, as much as I talk about Amazon on a 10-year scale all the time, and perhaps a lot of people are just like waiting for that. But that's why relative value is so important, because I'd rather put all my money in Meta right now than Amazon, because like Meta has a lot more value to capture as it realizes its 2024 profitability. And it had an amazing quarter. I mean, it beat analyst estimates by 21%, which for a business of its size is pretty incredible. And then you actually go back and say, like, this last year its EPS was $1.64, and it provided 461 this past quarter. That's incredible. Like, but that is why we highlighted it in the newsletter this week, because it actually shows just how skittish the market is. That they said one concerning thing about ad revenues, and this like amazing quarter erased its stock. value, or like it erased it's like it ended up going down by the end of the day after they reported, which actually just like shows me how concerning the market is, and kind of ties back to what we first talked about first, which was like also this nice morning evaporated pretty quickly. So it just looks like there's little to no confidence among investors right now, which yeah, it makes it, as we started, say it's pretty long. It's pretty difficult to be long anything right now, I think.
Yeah, so I think I know your answer for my next question, which is going to be not yet, but I'll ask it anyway. The S&P was down 10 out of 12 days before today, and the S&P 500 and the Nasdaq are both in correction territory, which means they're down over 10% from their highs this year. So at what point do you just start to say, you know what, the market's down enough where I want to start buying stuff?
Yeah, I mean, I think for me, my answers obviously rely a lot on the signals. Like no matter how oh, hi Adam. Uh no matter how much I would say I I I kind of like look at how bad the macro conditions are. If we see good SPY and QQQ net option sentiment, I would say that to me, that's enough for me to at least make my portfolio 50-50 long short, if not more. If things look, if I'm starting to think other things look bullish in terms of, maybe things that we've talked about, like Powell getting ready to start talking about when cuts might be coming, him backing off, like, talking about how problematic inflation is, things like that would be the things that I'm looking for there. But with how bad, like QQQ net option sentiment, I don't think it's maintained this. I don't think I've ever seen it maintain levels this consistently low, especially that close to SPY. Like I've seen it down in like in the 10 to 20 range, but then SPY closer to the 0 to 5 range. But the fact that they're converging basically means that I just see less support for tech businesses out there right now than I do for traditional ones. Um, yes, I'm going to answer this question next, or unless you want to finish that thought, Stephen.
I think we could just go right into the question. And before you answer, I just want to say I saw a story today about how Amazon, I mean, Meta is going to offer a $10 subscription price for people in Europe to not have ads, which is like the first time they're trying something to try and address some of these issues. But I'll let you talk about it more and answer his question.
Yeah, I mean, I think inherently you're right, Adam. Like there are more regulatory risks, and it's just because I mean, I think it makes a lot of sense, and it's kind of something that like makes Amazon's business. Like I don't know how well like Bezos thought through this in terms of their model, but obviously, I think people are a lot more concerned about things like emails and personal conversations being integrated into the ads for them, and that makes a lot of sense. Why especially those businesses and those ad models are so reliant on that kind of data to make their serve their ads, everything like that. So yes, I think there are definite inherent regulatory risks to Meta and Google. Depending, I don't know how deeply these conversations have been had with the regulators. I think it would probably be easier for Google to disintermediate something like email from how they did their maybe like search and search function. So I would honestly like fairly say that Meta is probably like the most at risk in those discussions. That being said, I think that like whether it's WhatsApp or Instagram or the traditional Facebook product, I would say that there's a real adoption curve that they've hit, and that I think whether it's an ad model or anything like that, I think basically the long and the short of how I look at Meta is I think there's too much of those concerns, like battling down the price when we still see excellent profitability for them and Google, and obviously like growth. Um, so I do think that those are legitimate concerns. I would never say that they aren't, but I still think those are priced in way too much relative to the value that those companies are producing, and that's why I'd say, especially on Meta, I'm so bullish because, like, I would say, unlike Google, I think Meta still has like a lot more room to grow in other markets, uh, even if they don't, even if they do face some problems in Europe, there's still so many countries with like burgeoning middle classes um, that are going to be adopters of Meta, and also the other things that we've talked about in terms of like, I think more conversations take place, whether, I mean, maybe most other than Apple and iMessage, like, between Instagram messages, between WhatsApp, between just the normal Facebook product. There's a lot of communications that take place there. And I think what makes me most bullish on those companies in light of those risks is all of the AI that's going to be integrated into these conversations and widen, I would say, the profitability and revenue base, even if some of the ad base shrinks. And by the way, obviously we saw a big like 23% growth in their ad business. So I think that kind of like, I think the way we're seeing that business grow, I'd say that's why I'm most comfortable saying like at these prices, I really like it because I see a lot of growth areas, even with some very well known risks.
And it's interesting because Meta and Google are basically the cheapest out of the big seven stocks, right? So maybe that concerns of the regulatory risks are already completely priced in, and maybe it would actually be bullish if they got resolved.
Oh, absolutely. I think they're definitely priced in. There's those concerns, and I mean the big thing that you hear all the time is like TikTok, and you heard it with Snapchat before it, but like TikTok's been around, and I think one of the things that I saw about Meta too was I think their average engagement time was up 6% this past quarter, and that was a big or year over year, and that I think was a big reason. One of the things that they pointed to for things going up. So it's like, yeah, TikTok's around, TikTok's been around, but we still saw them post a 23% ad rev growth. So I think that to me is a big thing that just says like, yeah, like these are legitimate risks and there's like legitimate threats, but you know, Meta's the cockroach of the big seven, I think. Like it's the one that people have like the least nice things to say about the product, but it just sticks around. And it doesn't seem to be, doesn't seem to be something that you can kill off very well.
Oh, that's a clip. I love that quote. I wanted to bring up some of the. We have another big week of earnings coming up. It's probably just the second biggest week after last one. So some of the stocks are Pfizer, AMD, Kraft Heinz, Airbnb, Starbucks, and Apple. So it's jam packed. I wanted to highlight some of these, and maybe you could go more in detail on any ones you think specifically are interesting to watch.
Can you Apple was one of the ones? Sorry, can you repeat it?
Yeah, so Pfizer, which I looked in Prospero, it had three upside breakout when I looked and 65 downside breakout. It's funny that you closed that draw because my uncle watches these streams and he actually texts me, all I can see is that open draw behind.
No, it really bothers me. There's like another one that I might get the next time you talk now. Like, yeah, it's like I see it in back of me and I'm like, oh my God, why did I close the drawers before this started?
Yeah. So anyway, back to stocks. Pfizer, which looks bad in Prospero when I was looking. AMD looked interesting. Kraft Heinz and Starbucks look bad. Their downside breakout was higher than their upside breakout. And then Apple and Airbnb.
You're in my job for me. No, I think yeah, I've seen like Moderna and Pfizer looking pretty bad. And I'm wondering if part of that is that like people are expecting these like the vaccine numbers to be down. I think that like a lot of like yeah, I'm definitely hearing like even like the most ardent vaccine people starting to be like, ah, maybe I'm not going to get another one. Those people like gung ho 100%, like I'm going to get it. I'm going to tell everybody else to get it. I feel like that's dying off, and I wonder if like how much of that is built into how much of that is built into these forecasts. And I just think like a lot of these stocks, like for better or worse, I think part of it is like they're starting to get priced in on like the risks of like flu season now expanded to maybe like flu and COVID season. And now that like we're getting into it and knock on wood, and um it doesn't really look like we're having like that big of a concern over it. Perhaps you're starting to see like, oh, like expectations that they're not going to post good spring quarters because we're not going to get as many of those vaccines. That's what I would expect. Um, but obviously those are much bigger businesses. I would say Moderna is a bigger, obviously that's been really hit, and I would say that's like a bigger part of their business. Um, but yeah, I mean, and you see like Eli Lilly is something that's done really well for us for a while. Um, so I think that we've wrote it in the model portfolio a lot. So it's certainly not all healthcare. Um, but yeah, we've definitely seen that be the case. Where I think a lot of like healthcare stocks on the whole have been having like a rougher time whenever we talk about them, biotech too. Um, but yes, I think that like Apple, it's going to be very interesting how this kind of plays out with them. I think that we typically have seen like some of the upside breakout, like kind of like go in like a range between like 65 and maybe 80. Um, and I think that it's hard. I was having some lively debates on our TikTok about like Apple seems to be one of our most popular topics. And yeah, some people are just like, well, businesses can't grow forever, and like in defense of Apple's like revenue shrinking. That's like, yeah, like they can't grow forever, but it's a bad sign when when they stop growing. Like, yeah, it means they might be on the downswing. Like, I totally agree. Nobody expected them. Nobody expected every company to just like like maintain market share, grab, innovate all the time. Like, but at the same time, you do expect companies that are continuing to grow their stock price and increase their market cap up and up and up, like Apple has, like you do expect them to grow. Otherwise, they're going to flatten out or maybe even go a little down like their sales. It's a very weird thing that people have this like attachment to like, oh, like brand, like you hear this with Apple. It's like, yeah, that might be so. And that's the reason that they're not going to like die tomorrow. But at the same time, like you start to see like some of the core businesses shrinking, and that's not a good sign by any stretch of the imagination. Um, so yeah, I think that that's a definite concern with them. And they certainly could start making some, like we talk about, like the car or like the VR or like something could turn them into like a huge growth company again. That's certainly possible, but we haven't seen those big innovations from them. Um, what are some other ones that you said? There was a lot to retain there.
Yeah, so I think the 2 that go hand in hand, maybe Kraft Heinz and Starbucks, and then Airbnb and AMD also.
Airbnb, Kraft Heinz. Oh yeah, Airbnb is like they've. I didn't stick with that short, and that would have been a really good short to stick with because like we were definitely right about that. But yeah, it makes it challenging. Some of these, like some of the volatility around. Oh yeah, net option sentiment is very low. 17. That's as low as I've seen it. The upside to downside breakout ratio, I typically see it closer to 50-50, and now it's 42 upside, 68 downside. Like, yeah, Airbnb is definitely in a concerning trend. Might think about shorting that again. Um, and yeah, craft is like, it's one of those things that I think you have to look at the hard numbers where, Chipotle, for example, we're generally concerned about consumer cyclical, which obviously Kraft Heinz touches a lot. Um, and I think, especially after seeing Chipotle, it looks like there might be some haves and have nots. And it's definitely worthwhile to do your diligence and not just assume that any consumer cyclical stock is going to be something that's cut back. So yeah, we obviously put Chipotle in our portfolio this week. Kraft, when do they report?
I think they're after the bell or maybe before the bell on Wednesday.
So I mean, take a look. How I'd approach stocks like this is that if you see a good report and good guidance, like I'd rather, and you have a diversified portfolio, I'd jump on opportunities like that where you see that they're kind of like weathering the storm well. Um, because like I think it stands to reason we're already starting to see some companies get, cut back on in terms of their products. So if they're already doing well, it stands to reason, and you want just like diverse sector exposure, it stands to reason that you would go for ones that have performed well that you can expect to be ongoing good performers. Now, the only other thing to like watch out with that is companies are perfectly capable, and I know this is a long time equity analyst. Companies are perfectly capable of like moving numbers around from quarter to quarter. So don't necessarily feel too secure if this quarter looks a little better. Like that I would like especially pay attention to the guidance and how they talk about the guidance. Um, but yeah, generally I'm keeping away. I like pounced on Chipotle because I was like, oh, this could be like a consumer cyclical stock that people do keep buying because they view it as something like a cheap way to like eat something that they like and that could continue. But I think you have to make sense of it in terms of like, even thinking about something like, craft. Like, is it something like, maybe you normally have uh frozen chicken tenders and you have ketchup with it, but you cut down on that and you don't get the ketchup. Like, who knows? Like, that's a tough problem to look at, but it's certainly like that's why we look at numbers to tell the story, right? Because if you see Kraft Heinz like not losing any sale, like not really showing pretty good numbers, like there's no reason to think there's going to just be a huge change between this quarter and the first quarter after the year. But if you start to see some like chinks in the armor, I think that's what some people like react very strongly to because perhaps rightfully so, they're seeing just this as a start of a general downtrend in their sales. And you should definitely watch out for that. And also, it's a good thing to keep in mind to look at. Often you're shown like this quarter last year with a quarter a year ago, and there's some seasonality. But if you're going to do your diligence, I would do things like check out um, check out the change to like the second and third quarter last year to this year. So you can compare those two changes, inclusive of seasonality, when you look at those businesses. I think that's a pretty good trick to look at where you don't necessarily always you're gonna much more frequently see them quote year over year or the previous quarter to this one. But in businesses like in most consumer cyclical, um, have some kind of seasonality to them, it's always a good idea to do that other check, see like Q2 to Q3, like what that typical change is, and then what it was this time. That can give you like another data point that you're not frequently that doesn't frequently kind of get shown to you automatically.
Now, here's an interesting note that I might surprise you with, George, because I've heard some of your thoughts on Microsoft. If Apple has a negative earnings reaction this quarter and they drop over 7%, they're going to lose the status of being the number one biggest company in the world to Microsoft. As long as Microsoft, I guess, doesn't get secondarily hit by Apple. But what do you think of that?
It's very were they ever was it Microsoft before them? Or are they like passing the torch? I think it was, right? I think it's a little back and forth. I'm trying to think. That's like an interesting trivia question. Like, what are all the largest companies in the last 20 years? Um, I think it was probably Microsoft for a bit before that. But yeah, no surprise, right? I mean, it's pretty easy to say like, you know, like ultimately Microsoft has that great B2B business, but I would say more and more kind of how we like talk about Meta. Um, people didn't love those Microsoft products. It was always just like, oh well, I'm using Microsoft and it's got these problems, but like I know how to use Excel. That's kind of how I always talked about it. Um, but yeah, um, I would say that basically that you see something like what's not talked about as much as I think the GitHub acquisition and Copilot and making it easier to code, and then actually ChatGPT and like what it could do to kind of like automate coding. Those are really really smart acquisitions. And you look at the contrast between like Apple being like, oh, we're too cool to even say. Everybody's saying AI, but in the last quarter, we're too cool to talk about AI because like basically like that's a cheap get. And then all of a sudden they're like, oh well, we've been working on generative AI for 20 years, and like, I think they just said that like we've been doing this for a while, and we're spending $1 billion a year. So that's a pretty quick reversal, but too late, right? Like, meanwhile, you're saying like you're too cool for it last quarter. Now all of a sudden you're like, oh, we're going to spend a bunch of money. Meanwhile, Microsoft acquired pretty much the leader, especially in like interactive conversational AI, unquestioned leader in that. and then you have like cool technologies like integrating it with like GitHub and like and being able to like have it help you code, and that's what like a lot of people like already use it for outside of that. And we're going to see more and more integrations. So like, yeah, you're talking about like two businesses, Microsoft and Apple, that doesn't always make me very popular, but who cares, are not as good as innovation as the rest of the big seven. They just aren't. Um, doesn't mean they're bad. And I think this is where some people get confused in our videos. Is like, do they still innovate better than most companies? Yes, without a doubt. But like when you compare them to like Tesla or Nvidia, like no, they don't innovate as well as like Microsoft and Apple do not innovate as well as those companies. Just like not even close. Um, so yes, I would say that that's like a big part of it. So like when you're basically looking at like, oh, is Microsoft making some interesting plans, acquiring some interesting companies that like they're gonna have a big stamp on the future? Is that gonna like make them? Is there a logical reason that they would overtake Apple? Yeah, like I think that makes a lot of sense, and I don't think anyone should be surprised. Um, but yeah, and I mean even Amazon and Anthropic, right? Amazon has a pretty good name in AI, and even they're looking to acquire additional technologies. And like meanwhile, you have Apple just being like, oh, like yeah, just wait for the cool stuff we're gonna give you. Like we've been working on this forever. It's like okay, like it seems a little defensive and not like, offensive is like 2 years ago. You mentioned that you have something in generative AI and you're working on it. Like, if you're working on it for 20 years, like, Lord knows how long have we been hearing about this car for like what, 5 years, right? Like, you're working on generative AI, you have really cool things going in, and we don't hear it at all until like a quarter after you've basically been embarrassed by not making enough waves in AI. To me, that's like the definition of defensive, the definition of like not doing real work in something.
Yeah, and so since we're on AI, I'm going to bring up one of our topics. The White House is signing a bill about AI, and it seems like what they're going to do is require more access to data from all the leading AI technology innovators in the space. And everybody's been worried, and everybody's been saying there kind of needs to be some sort of regulation. So, do you think this is a step in the right direction for AI development?
I mean, like most things with the government, this is like not like, I would say it's kind of similar to Apple, where it's like face saving, reactionary, not anticipatory. Like this basically came about, I think it was a week or two ago, that they basically like, I think it was like some kind of intelligence service was just basically like, oh, hey, like maybe we shouldn't be like using chat gpt and like putting our like confidential information into chat gpt when we have like no idea where it's going or how it's being used, etc. So they basically like, I think it was a week or two ago, they announced like until further notice, like we can't use it. We can't use something like ChatGPT. So that's hilarious to me because like essentially what we're now talking about is that Biden just like probably had a lot of people complaining that they couldn't use Chat GPT. So this was the fix, right? He's just like, okay, like we're gonna do this, but you have to share the data. Which it's a wonder why this was not just like the first move. It kind of shows how like reactionary, how behind we are. That like it's always just like, oh, like first we have to just like not use it anymore before we scramble and figure out like a very obvious solution, which should have been table stakes to begin with, right? Like, hey, we're gonna start using this, like whatever, we have secure information, like we have to know where it's going, or like in reality the government should have just like figured out something with like some special servers that they both had access to that didn't go straight to Microsoft, that they could like make sure had like a special level of security on it, because like even now, even if they're sharing the data and it's still going on to Microsoft servers, like Microsoft could get hacked, could have confidential government information hacked. And I don't know how they're setting it up. This is just a theoretical. It's possible they've worked this part out, but like just to do the theoretical, what I'm basically saying is like Microsoft could basically get hacked, and then like the US government just knows they've been hacked, which seems pretty backwards as opposed to like what could have been negotiated, where there's like a server that runs GPT that like you could even probably get the government instead of you to pay for the compute on. And then like both Microsoft and the US have access to it, but it's the government's responsibility to lock it down. These are just like common sense kind of solutions that, you know, is, by the way, I think going to be one of our biggest problems. And it just like it's mind-numbingly crazy, like how much like how old our government is getting, and they just keep getting older and older because we don't have term limits, and these people are just like we have a bunch of basically like corpses serving in government on both sides now, and that's just insane. But that's insane in a regular way. The fact that like these people are now being expected to make like major decisions on technology when it's unlikely a lot of them even like know their way around a smartphone, let alone like understand like the complexities of like data storage and how to share it and how to use it and how to lock it down. Like, yeah, it's pretty nuts. I mean, it's nuts that we have like people that are just like much older than us making a lot of these decisions, but especially technologies that are like 2 or 3 generations beyond what they understand. Like the fact that we expect these people to like weigh in on this in an informed way is crazy. And I mean, we do expect it, and what we should expect alongside that is bad decisions.
You know what? Something you said made me nervous about like the ability of, I guess, AI going forward and AI companies to be able to service like a worldwide audience. Because what you're saying is like the government, when you were saying the government could fund the databases, wouldn't like other countries get nervous about having that data being so easily accessible to like the US government or say China, an AI company in China? So like are these AI companies going to be able to globalize, or are they going to be like sectioned into ones that start up in each different country?
Oh, there's solutions like what I talked about. Like when I worked for financial institutions, a lot of the times we just did this where like neither of us owned the cloud compute, right? We'd set up a environment where we both basically had access to put things on, but it was locked down to take things off. And that's just like the logical, like you can interact and like with a chat GPT, you can like copy paste doing everything like that. It's not a silver bullet, but like a lot of situations you can wrap people around getting comfortable with tech solutions that have that kind of solution basically. But and there's other ways around it. There's also like, I think increasingly like I think what will happen, we'll see. Like there's like Llama, which is basically like an open source chat GPT. And if like that I think becomes a big enough thing and enough people are like moving off, I could see chat GPT basically like giving you an enclosed program. Like you could buy a license to it for like a flat fee and like license fees. Like you pay them $100,000 and then like $10,000 a year to keep using it. They could just like hand off the chat GPT model to you. Um, and I do think we'll see that. And like for me, like I think a lot of people that are tech savvy, that's the first question. I'm starting to look at some new generative AI applications and working with different vendors on it. Um, and that's the first question I ask is like, are you going to use Llama? And they're just like, yeah, that or like some variation of it. So like already, um, I think Microsoft has to start to think about how they solve that problem. Otherwise, they're going to spend a lot of money on basically like what we talk about sometimes. Spend a lot of money on like the first step in the R&D and not necessarily the final fix or the product that gets used widely. I'm not saying that for sure because it might evolve, and actually Microsoft, that is something that they're very good at. Figuring out like how to properly commercialize something so it balances like what they make and it being widely used. And obviously they have the sales force to sell into a lot of these places, but I absolutely think they're going to need to figure out um they're going to need to figure out what they want to do with their business model. And I think what they're doing right now is smart though. They're letting the market play out a little more before they figure out how they want to do it. And I think that is smart because you have to see like what other people are doing, like what the ultimate monetization is, etc. Um, but I think it was smart and it's doing well for their stock price. And anything that does so well for their stock price, it's hard to say like it was a bad decision, but it still might have been hasty in terms of their ultimate ROI. I think without a doubt, it's going to be, it has or will earn them more than they pay without a question. But like if it's that like 20x growth multiple of a business that like, I mean, not on their whole business, but like, if it gets to those huge multiples of revenue, I think remains to be seen, especially because I think, and this kind of goes back to what we're talking about with like having tech people understand these things versus like just like people like older people that can like maybe start to grasp tech concepts, is like something that I think about all the time, and why data is so important to us is I'm not completely sure that um that we're going to have uh that open source isn't going to be such a big thing, and that's basically what we're talking about here. That it's not going to be like such a big thing that it really eats into how much they're able to, monetize that product.
That's an interesting thought to watch that play out. I wanted to spin it to companies that just had one of their problems solved. So the UAW just signed a tentative deal with the automakers to end their strikes, which have been going on for a few months now. And Ford has been down 25% in the last 3 months. GM was down 29% in the last 3 months. So I wanted to get your opinion on if these companies are buys now that the strikes are over, and if this resolves some of those problems that have been hitting the stocks.
No, I think that like I looked at Ford, they're doing terribly. GM is doing a little better. Cruise, I think, just got its license pulled in San Francisco or California to do their automated, like that's not a good thing for them. Um, but yeah, I would say that, it getting solved is not really what needed to happen, because if you look at it, I think the real problem that it highlights is that how like kind of stale these businesses are with these unions, and that like you kind of look at like it's the same kind of thing with the writer's strike, where you're just like you look at both sides, and the problem isn't necessarily that like one side is being super unfair to the other. I would say they're both being unfair. But part of that, and like, both being unfair, but obviously I would empathize with the unfair people that are trying to make a living wage over the unfair people that are trying to just profit off their company. And I would say like especially with auto workers, like the unfairness, and we talk about this, like all of the pension payments that they've set up, it's like it's very hard, and like where it's like unfair is at the end of the day, like Ford, GM, etc., they have to compete with the other automakers. And that's why I say it's just like, well, it's like, why is it unfair? They're making all this money. It's like, well, part of the reason they have to post profits is if they don't post profits, companies like Tesla will eat their lunch in the stock market as like a much more viable long-term business. And then, they might go out of business. And then all of the pensions get lost. So there has to be like some, give on both sides. To have these businesses be viable. But like I'm saying, the larger problem is that they're getting increasingly non-viable because the profits demanded of these type of businesses, and any business is growing and growing. And like these like old business vestiges like high pensions, and I would even say like older assembly lines that even require more workers. Even though some are trying to modernize, all of that kind of just like highlights and shines a big light that these are not modern business models. And no matter how much they might solve the problems of the day, there are existential risks to these businesses. And it's like the thing is, no matter how good a car Ford makes, like the amount that the markup it has to charge for it because of all of this infrastructure is, I would say, damn near impossible to envision them making like so much of a better car than, say, Tesla, that they could like essentially be of value relative to them. And I think that that's really like the core problem, because like Tesla has more automation, they have less like old costs, like 100 years of like pension payment, maybe not 100 years, people die, but you get the like 100 years of a structure supporting these pension payments, um that also require more workers in their business. There's kind of more overhead, there's more bureaucracy in older companies. So like, yeah, like it's not a surprise that you ultimately like look at a Tesla car and say like, oh, I'm getting a lot more for the value. And that is like pretty much just as much due to business structure as it is to innovation. And that is the problem. Like Tesla is better suited to innovate in terms of the organization, the way it was set up, everything like that. Their labor structures are better for profitability, and they rely on labor less. So yes, I think that's kind of like a perfect storm for basically like all of these new automakers to do better than the old ones. And there's really not good solutions because it's not like laying off a bunch of people and making it. Yeah, good point, Mario. Mario said Detroit can't compete with Toyota, much less Tesla. Um, and yes, I mean, and I think that's actually a really good example there that's brought up. It's like we're talking about like the ability to innovate and industrial automation. And Toyota really beats Detroit a lot on the industrial automation aspect to it. But industrial automation also makes it easier to switch to more innovation because the more you're kind of locked into a certain industrial structure, and need to like say do some things like retrain humans, that's a lot harder to do than just changing the programs by which say a factory runs on and the inputs. It's not a snap, but it is definitely easier than rewiring all of the human capital that it takes to even change up your industrial automation processes. um, and so, yeah, that's why I'm very bearish on car makers overall. That being said, keep watching for value. Keep watching. GM looks better. Keep watching for that upside. If you ever see like the upside breakout, I'd say 20 points or more higher than the downside breakout. Um, and then maybe profitability plus growth above 100. If you ever see that, you might just have, we might have found the value there. And I don't know how far away, but um, we can check out where we are there.
I just had a wild idea which I want to run by you. So I just looked at Ford's market cap; it's 38 billion. Could Tesla or Apple ever buy Ford for all of that like production capability and their factories?
I mean, they could. Like, I think Tesla could very well buy, but like, they don't want those old factories. That's what I'm saying. Like, they want new factories that are set up for like modern industrial automation practices. And it is way easier to build a new factory than like retrofit an old one. Like, granted, like where it is easier is like if you're making a certain model of car and you're like tweaking parts of it, right? That's easier if you're Ford to modernize a little. But in terms of like taking a Ford factory and like and retrofitting it to like, you're better off burning that factory down and building a new one than you are like trying to like change out all of the like parts and moving things out and then moving them in, you know and like changing all like hiring engineers to like rewire all the code, like change Ford code to like it's just like, yeah, you're better off burning it down. And actually, like that's something that I've learned a few times in our code base. Probably like the code base, even though I'm still using ideas that I've had for maybe 10 years or more, like the code to support the ideas is no more, this code is like no more than 3 years old. And there's been a few times where we just like completely rewrite everything because like as you just like build and code and alter and like, change a little bit here, change a little there, like the code base just gets like bigger and bigger and bigger and it's harder to manage. And a lot of the times, if you're a good lean organization, you kind of just like every once in a while look at your code base and be like, what are we using here? What are we not? And then like you can take parts of it. But like, yes, that's probably a good like analogy here. Like if Ford had interesting ideas, like, and like Tesla was like, ooh, like maybe I'd like that model of car, or maybe like that's an interesting industrial automation practice that I would like to take on from Ford. You might see that same thing where they'd acquire like that and then just like build a new footprint. But like, no, it's exactly the problem. Like Tesla does not want to acquire like all of those pension payments. That's like just like dead weight. Like I'm saying, like they would have to be like much better at innovation than Tesla for them to even consider that. And they're much worse. So like the day that we see them becoming a value, maybe like the only way, like so I don't someday like have this thrown back in my face. The only way it would make sense is if it was like kind of like a bank distressed acquisition. like Ford was about to go out of business and Tesla was like, well, I guess we'll take all your cars at 40 cents on the dollar and we'll sell them in our dealerships. That, and like, by the way, and we're like explicitly not paying your workers. Like, you will fire them all. Like, and then we will like take certain parts. Like, that's what ultimately happens when, like, Bear Stearns, for example. Um, oh, someone's messing me on Slack. I'm not very good at the yeah, exactly. Fire sale 10 cents on the dollar. Like, that's the only way you'd see it. But like, yeah, I was at Bear Stearns back in the day, and basically like they hired like a lot of, I would say, the JP Morgan hired pretty much some of the smartest people that I knew there went over, but even they had a shelf life. So when you acquire a company, like, you're acquiring a little bit talent, but most of the time when those like very distressed sales happen, you're basically buying hard assets at a discount. So you're like selling factory parts, you're selling cars, you're selling, and like, yeah, Mario's at 10 cents on the dollar would probably be, I would say, like, 30 cents on the dollar, maybe a little less. That's how those things go. But it also depends on like how specialized your equipment is. I would say, like, if you look at something like um AMC or like movie theaters. They don't own a lot of those theaters, but let's just say they did, right? Even if all those theaters were worth, you know, $10 million, like, yes, you would probably only get $1 million for those theaters because like they're equipped to be movie theaters. And like before you actually like got them ready, you'd have to do like a lot of construction. There'd be a lot of investment before you could actually like repurpose those or maybe sell them to other theater companies or like whatever. Um, but yeah, like I think like there's two main reasons to acquire a company. Like, and there's like a lot of more nuance to this, but like I would put it in this way. They're ascending and they can innovate better than you, and they have like talent that you think can innovate better than you or add um to your team. Like for a while, Google would acquire a company. Like a lot of like they say like managers at Google or senior and up came from acquisitions because they didn't do a good job growing their talent. So they would actually acquire to find leaders. Um, and then the other thing is like what we're talking about, like a distress asset sale. Like is pretty much like the main other category, or some kind of like debt problems. Like, hey, we can get this at a discount. We can get this, like, if we go through a little like if we go through a bit of a rigmarole to get rid of these assets, then we can do it. And I mean, I think the perfect example is like JP Morgan and Silicon Valley Bank. I think they got a $3 billion payment to basically like clean up the the assets from Silicon Valley Bank, and they really wanted the customer base from Silicon Valley Bank. So that's just like the perfect example of like you get leverage, you get desperation, and then all of a sudden these become attractive. So like we'll see if that comes true. I would not be surprised. That would be the one thing that didn't surprise me, to see like maybe in 5 years Tesla basically like uh get one of the automakers in a fire sale, or Apple. That could be another interesting one. Like
Hmm.
more so if like they're trying to like break into the car game, and they just actually just like want the factories, and they don't mind putting a bunch of money into retrofitting things, because like for example, like Apple may not have factory designs and everything already ready. They might just have like a car prototype. So it might actually really help them to acquire, say, like Ford at like 40 cents on the dollar, get the asset base, and like do exactly what we're saying. Grab the parts that they want, grab the team members that they want to like scale up pretty fast. But it doesn't make as much sense for Tesla because they already have the whole car team and the whole like scalability thing with the car team.
I think they should hire us to head Apple's car division. I think this is a great plan going forward. We'll see if it ever comes true. But I wanted to spin to two companies that looks like they may need to be acquired soon. The way they're headed are PayPal and Square or Block. It's crazy. They just go down every day, and they're actually hitting lower lows than they did during the COVID lows. So, what do you think is causing this? And do you think these companies, like, let's give your thoughts on those companies? They just go down all the time.
I've got some funny stories to say about. I separate PayPal and Square because I do think Square I do really like their payment business specifically. Like, and I think it's got a pretty wide footprint, and there's no reason. I think there'll continue to be a lot of small businesses, online businesses. Like my Substack goes through Square. Like PayPal's got a bigger footprint, but it is concerning about PayPal, especially like I would say their core business, like sending money. Like I think more and more banks are getting smart about that. And like my business bank, Brex, for example, um, is free wires, right? So why would I ever like pay a vendor in PayPal when I can just like wire from my bank for free? That is like that's one like major thing and an easy example. But also the thing about PayPal and PayPal credit that I was having a conversation with a friend a few weeks ago. And she said, "Well, I did this like, pay in four thing, but like that credit card got canceled and now I'm wondering if I even have to do it." And I was like, "Well, like it's up to you. Like it depends on how much money, how much free cash flow you have. Like I don't think there's anything immoral about doing that. I think you probably need the money more than PayPal does. So like if that's a comfortable thing for your morality, go for it. It might hurt your credit score a little, but that's the problem I would say with like PayPal and like paying for and that kind of thing is like the way that they set it up, you can pretty much just set up a new account. And like I've heard people doing that and they don't even like they check via like email address or like whatever. And they'll let you do that because they're like so desperate for the customers. Where it's just like I just feel like there's something broken about a model because like a credit card, if you go to like Visa or like whatever and you don't like you default on your card, they're not going to just like let you get a new one. They have practices in place to do that. But I've heard people talking about that um, in response to um, PayPal. That's not the first time I've heard, especially like that pay in four thing. Um, that is like a lighter, like obviously it's not like a real credit card. It's like more of like an advance. And yeah, I just think that that's super interesting because um because it's like I think I think the problem is they care a lot more um about uh just kind of growing because they do need to keep posting these numbers, then it seems like they have a real good long-term business plan where it's just like Zelle is doing well, like free wires, like all that stuff. Like their business model made a lot more sense when a lot of banks weren't doing free wires and having things like Zelle. Like you still have to pay for PayPal. So it's like the one thing that I do think it works really well for is if you're like buying something and you get their insurance and they'll guarantee that, but like the market for that is like only so big. And like again, you have to look at these you have to look at these barriers. And if I'm just like, is that a real barrier? Could banks start guaranteeing, move from like wires or Zelle or things like that to like do like payment insured guarantees? Yeah, they could move into that business too. So I think PayPal laid a lot of infrastructure for sending payments when it was not that easy. And they talk about like eBay. If you read like Zero to One, Peter Thiel's book, which is a great book by the way, and I didn't read it for many years because I'm not Peter Thiel's biggest fan. Um, but he's actually like we shared a lot of similar ideas. But like yeah, he talks about how like a lot of that was just like laying the right infrastructure, and their big target market earlier was like these eBay people that like had no good way to like send money and do things quickly, and that was a good market for that. But like just like we're saying, like yeah, they're still the best thing for that because of the insurance. But in terms of just like sending money, like I I would much rather just like wire something if I have the option.
Certainly interesting thoughts on those companies. And I just want to tell all the people here we're going to end in the next few minutes. So if you have any questions, feel free to ask. And we have a few viewers. So I'm sure there's one person who's not subscribed. We blew through the 400 resistance last week. So let's try to get to 410 today if we get one subscriber right now. But as people are commenting, if they have any questions, I just wanted to bring up we have a Fed meeting this Wednesday. Jerome Powell is expected to hold rates steady, not raise or decline them. And I know we've talked about in the past how when the market's going good, Jerome Powell's kind of been a bit more bearish, and when it's been going bad, he's been a bit more dovish. So do we expect him to kind of have a positive tone on Wednesday since we've been hit recently?
Um, yes. Well, maybe not positive, but I don't expect. I expect him to tone down the doom and gloom for sure, because like we're saying, there's not a whole lot to be excited about in this market, and about people worried about the Middle East conflict. I definitely have seen a ramp up in people just like concerned about that and the impact, and like obviously us talking about like one mention of it from Meta was enough to like send their stock going in the wrong direction. So, yes, I definitely think that he's going to come in like trying to be pretty soft with everything. And if he isn't, it's going to be a real bad day. But yes, we have obviously seen we have obviously seen the bets on the hikes really subside. So I think it's a fair bet to say that he's going to almost entirely back off um, of the hike. Maybe say something like, we're still a little worried about inflation. We haven't seen it get back to our desired levels. But, we'll be cautious not to, you know, hurt the economy too much as we're starting to see some of those numbers decline. I would expect something like that effect to be said. Um, but it really depends. If we see a rally like a few days into that, we might very well see him using that slack um, to say like, well, like we keep seeing these rallies, we see a lot of resilience, but I don't think we're there yet.
So we got a question from Anthony. He's asking if the high interest rates are affecting REIT stocks negatively and if it's a good time to buy them on a discount.
Definitely we're seeing REITs like there was some strength, but actually I'm seeing more and more weakness in the real estate market, and I do not think that it's a good time to buy because I think what we've seen is like interest rates affecting demand for anything, and then any REIT that like touches commercial real estate. I think we're still going to see like a lot of problems in that because I don't think that we've really started to see the price declines that I expect we'll see, and I don't think we'll see a crash, but I think as we see the full impact of the rates, um, like basically like the rates reducing demand, and then also a demand reduction from less money to spend that we see from things like the credit crisis, perhaps more job loss. All of that makes me concerned about REITs for sure, and I wouldn't. That's something that I would stay away from. I'm not quite where I am with consumer cyclical, where I see that as like kind of like a categorical short opportunity, but I'm definitely closer to wanting to go short REITs than long, but not really either way. I like that's kind of where I would take the signals as it was. If you find a REIT that has higher upside breakout than downside breakout and profitability and growth over 100, like, and you like that investment, that is enough of an endorsement that I would say, like Prospero says, that that's a decent way to diversify into that segment. Um, but on a whole, do I think it's a good value where it is right now? No, I don't.
All right. And we got another question from John. He's asking, how do you feel about Disney on a 5-year time horizon?
Not good. Um, I just think, and we've talked about this a lot. I think they're a little. South Park just like ripped on them, and they nailed them pretty well, actually. Like I like the Panderverse. For those that like South Park, it was a good episode. But they really nailed them. And honestly, like that isn't the first time South Park has really like made me think about something and be like, oh, like maybe this isn't a good long term strategy. I used to like Family Guy more, and then there was the episode where they made fun of Family Guy, and I was like, oh my god, this is garbage. They're right. So like that is like South Park is very good about like making a point like very well that might seem obvious after. I was like, yeah, oh yeah, they're so right. And they did make a really good point that I think like Disney, and it's kind of like I'm going to loop it into my problems with Disney, where it's like they don't seem like they have their own vision. They seem like they're doing a little too much about like what like the public or whoever like wants them to do. And that, as you could probably tell if you've watched a decent amount of these live streams, that is like what I hate more than anything else. I'll take a company with like their own vision that I might not see yet, but like they're experts in their field and like, hey, maybe it's gonna work out. At least I can't say that they're wrong over a company that just like seems to have zero of their own vision, which like looks like it. Like, we talked about it with Apple, and like there's like my biggest problem with like Disney Plus is like they were like literally the last ones to think about it. Like when everybody else did it, they're like, oh, I guess we need a streaming service too. And it's like, well, maybe that's not the best place to like put your money if you're the last ones. Like I think it would have been much more clever of them to like create a bidding war over all of their content with the other streaming services and then not invest a bunch of money in building all of the infrastructure that you need to make a streaming service. That's like the perfect example of like not being smart as a late arrival. And like the other thing that I have a big problem with that they should have done, but they're just like too much of chickens, is they should have like looped ESPN and sports into it. Like how I would be so much more bullish on Disney Plus if they just like took ESPN off cable. We're like, nope, this is the only way you can watch sports TV now, and you have to get a Disney Plus subscription and win the bid on the NFL too. And then all of a sudden you have ESPN, you've got like exclusive rights to broadcast, then you have a must buy as like a streaming service. And you could probably get like $20 a month for that. Like if you loop in the sports content, plus, the added benefit of like a slight markup on the Sunday ticket or whatever. And you could like, yeah. Um, you could do a lot of stuff with sports clips as well, recommendations around sports clips. But no, like that is the problem with a lot of these businesses and just arriving late. Like when you arrive late and you're being defensive and you're just copying other people, invariably you're not very good at innovation. Surprise, surprise. And it's just like I only really find myself going in like Disney Plus to watch like the Star Wars universe or like to make my nieces or nephews happy. My nieces or nephew. I just have the one nephew. But yes, I don't really like it over 5 years. There might be little trading opportunities when like it gets hit too hard, which I do think it will be at various times. Um, but they got no plan, and like I also just think like parks are a big part of it, and like yes, there's that existential like part of the reason that like I don't think I would really want to own like Disney if I was like worried about a flu season or if I heard about like the first news about a pandemic, the first thing that I'm doing is like I'm selling anything that has like a public like retail presence. I learned my lesson enough the first time to see that. And like it's the type of thing that even if it doesn't get super affected, the market is going to start pricing that in and being fearful around that. So you better do that quick or you might lose your opportunity.
Thanks for the questions, everyone. Hope you got your answers. George, any plans for Halloween?
No, I don't really like
No.
Halloween. I might let the kids in my building trick or treat. I actually tried to do that and I bought candy and nobody showed up. I like live in like a building with like 12 apartments or no, 24. Um
Hmm.
and I signed up and they didn't show up. But no, I don't like I think some people like it, but I think like costumes are just like a little juvenile. Like I like to wear cool outfits, and I think that's a cool way to like express your creativity. But like, yeah, like I'm an adult person. I don't need to like dress up in a costume.
Yeah. But if there's no more questions, I guess we'll
And you,
wrap up for
Steven,
today.
I'm sorry. What are your Halloween plans? You're like, I'm gonna dress up.
I'm just the question guy. No, I'm kidding. I don't have any Halloween plans. I live in like a residential area though, so we do get a lot of trick or treaters. So kind of just handing out candy. I got it ready, but that's about it for me.
There
Um,
you go.
yeah. Uh, and anybody comment your Halloween plans if you see this and you're watching it later. Uh, but if not nothing else, we'll be back Wednesday 3 p.m. November 1st.
Oh, that's a good idea, Mario. But I need like a wig to be SPF. But I think maybe I could like a
Or
wig I
just a
can.
perm.
I don't know how perms work, but that would be pretty funny if I could do that.
That
All
would be
right,
funny, actually.
we've devolved into costume ideas, but I've got some real work to do. Thanks everyone. Thanks for coming.
See you Wednesday, everybody. Happy Halloween.